Hello again, everyone. This is Joe Henches with Beyond the Chart. And in this case study, we're going to talk about how I use puts to sell Twitter. So stay tuned. Okay, so here's the setup. This is the Trade Ideas page, right off my Trade Ideas page that I use for my insider members. And this is how I actually lay out the trade idea. I said, Twitter on November 1st, which is a Sunday. I said, I'm looking to sell, and the sell at 28.34. I have the suggested option, talk about the delta on the option, the average true range on the stock at the time, closing bid and ask on the stock on the option. What stop am I going to use? The initial stop, the initial target. Okay, so where are we? We're back here on. Here is October 30th, and here is September 2nd, or November 2nd, not September, November 2nd. So this is the entry day right here. And what did we have? We saw how we had this big counter trend rally going on here, and we had several very minor trend lines being broken. Then we got two consecutive closes below the 10, and it just looked like this thing was getting ready to roll over. And so at a break of this low, the low was 28.35. And that's why I said the entry point was going to be sell at 28.34. So the very next day on November 2nd, we've got the entry. And that's where we bought to open 3 December 30 puts. So we're in the money, December 30 puts. December's all the way out here, so we had plenty of time. And then what ended up happening? That day it kind of reversed on us. So it's frustrating. I hate when days do that to me because the first day, you like to end up at the end of the first day, and of course we didn't in this case. We had a little counter trend push going on for 3 days. We had to sit through this little pullback, but because my stop was 2 consecutive closes above the 10, this is the 10, the blue line is the 10 exponential, the blue gray is the 21 simple, okay? And so there was no stop being contemplated. We never got a single close above the 10 in here. Okay, so then it started to round back over, came back down, and my initial target was 25.04. And we finally got hit at 25.04 on the 13th, as you can see on the 13th. Sold to close, 2 of the 3 at 5 bid. And so a lot of on these trade ideas, I always enter at the ask and exit at the bid to be conservative. Now, I always tell my insider members, I'm not saying that that's the way you should execute. You should try to beat this. You should always try to get in the middle of a spread. And of course, we're trying to trade options on stocks where the spreads are fairly liquid and fairly narrow. And on Twitter, that is the case. So we got out here. Now the stop on the remaining option, the remaining position is, I had this break even at worst case and stop on remaining a close greater than 25.58. And why was that? Where was I doing that? 25.58. And actually, I think what ended up happening is I actually should have exited right here at a close greater than 25.58. And I think what we did on this, we kind of spaced out, honestly. And, I really should have exited right here, and it would have gotten more than the 4 that I got. And we ended up staying in this and tried to ride it with the, consecutive closes above the 10. But once it got out and stretched for quite a while, this had been like 3.5 weeks in the trade. And then I saw that we were going to get another close above a 2-day high. I said, okay, that's enough. We're out of this. But you could see what happened back here. This was a close above a two-day high. And so really, I should have actually exited here, 2020 hindsight. You can always learn something on every trade. I mean, there's no doubt you can learn something off of every trade. We stretched out. It really didn't gain us a whole lot at all. Now, yeah, we were in the money by 4. So, this was practically all in the money at that time. The time value in that option was hardly anything because remember the strike price was 30, and so being at 26 is going to be worth 4 to begin with. And so the bid was 4 where we exited, and so we had that profit of 542 on this, 63%, 23 trading days. So that's basically almost about 3.5 weeks, 23 trading days. 63% profit. pretty nice move, actually. Pretty nice trade, even the fact that we let it meander all the way out here when in fact, we should have gotten out here on November 18th. So this was a good trade. And when you think about where did this thing really move, I mean, we're talking about an entry that was right in here. So look at the horizontal line. So literally from here to here is the move that we got on the stock. And that generated for us a 63% return on our initial investment. That's the power of options. All right, that's it for the trade idea on Twitter, and showing you how we could sell Twitter and using puts to do that. All right, everyone, we'll see you on the next video. And check out the website. Come on over and sign up. Hit the link down below and sign up for my free. I've got these free video newsletters that I put out. I call them video newsletters. Really, like a little short market update that comes out on Tuesday and Thursday. And of course, I have the one that comes out on Saturday, but this gives you a little briefing in the middle of the week, and it's free. I try to keep it short to 3 to 4 minutes. So hit that link, sign up for that, and we'll see you on the next video.